Good morning, I'm Lauren Hayes for the Finance News Network. US stocks fell Tuesday, reversing earlier gains as investors looked ahead to key inflation data and earnings out later in the week. On Wednesday, the producer price report will be released, followed by the September Consumer Price Index Thursday. On Friday, September retail sales will give further insight into consumption. Overnight, the International Monetary Fund downgraded its global growth projections for next year and warned of a harsh worldwide recession if policymakers mishandled the fight against inflation. The S&P 500 slipped 0.65%, but was off of earlier declines that pushed the index to its lowest level since November 2020. The Nasdaq fell 1.1% to its lowest close since July 2020. The Dow Jones Industrial Average rose 0.1%, bolstered by jumps in Amgen and Walgreens Boots Alliance. Stocks fell off highs of the day and bond yields ticked up when the Bank of England said its market intervention will be over soon and that pension funds have just 3 days to rebalance positions. UK pension funds, however, have asked the Bank of England to extend their bond purchases. To add to the gloom, JP Morgan CEO Jamie Dimon warned this week that the US would likely fall into a recession over the next 6 to 9 months and said the S&P 500 could fall another 20% depending on whether the Federal Reserve engineers a soft or a hard landing for the economy. This week also kicks off earnings season. On Friday, JP Morgan, Wells Fargo, Morgan Stanley and Citi, 4 of the world's largest banks, report quarterly earnings. Across the sectors, no real consistent leadership from any industry, with semis, software, media and streaming underperforming. In company news, Rio Tinto plans a 500 million Canadian investment in the critical minerals space to source titanium and scandium in the West rather than from China. The materials are essential to aerospace, medical products and fuel cells. China produces 3/4 of finished titanium products and 61% of scandium globally. In Europe, LVMH, the world's biggest luxury group, showed little sign of weakening demand for its high-end handbags and champagne in the third quarter, despite growing fears over the global economy. The company, controlled by Europe's richest man, Bernard Arnault, reported quarterly sales of 19.8 billion euros, ahead of analysts' expectations. Louis Vuitton and Christian Dior brands generate 2/3 of group operating profit. On the currency front, one Australian dollar has continued to weaken compared to the US dollar, buying 62.75 US cents. The US dollar index was slightly higher, with sterling weakness the big FX story. On the commodities front, iron ore futures are pointing to a 1.9% fall. Gold shed 0.1%, silver fell 2.4%, copper lost 0.3% and oil dropped 2.8%. The SPI futures are pointing to a 0.3% fall. I'm Lauren Hayes, have a great day.